Ladies and gentlemen, you may or may not know that we are in a massive descending channel formation here for Bitcoin. But what you probably don't know is that we've just interacted with the center line of that channel formation, and it's very clearly painted a picture for us here. It's shown us clearly that Bitcoin is not in a safe position yet, and it needs to move above a certain level to be in a safe position. So we're going to explain the descending channel. I'm going to quickly show you it here today. We'll explain this full scenario, and we'll also look into the other charts. So we'll look into Ethereum, total cryptocurrency market cap. We'll dive into USDT.D dominance as well, as something that's quite interesting to look at. We need to be breaking down from USDT dominance in order to be in a good position in the crypto market again. Believe it or not, I know it sounds weird saying breaking down, but it's an inversely correlated chart. And I'll finally end up the video by looking at interest rates, looking at Federal Reserve, what they're going to be doing next and how it relates to the markets. We really need to be seeing a 50 basis point cut at the next meeting. I think that will be the most bullish scenario. So we've got a few things to dive into today, guys. Without further ado, we'll get into it. Just one quick thing. So I suppose we are having further ado. The VIP group on Telegram, right? If you want to trade altcoins with me on the VIP group, I post altcoin trading signals 4 times a week. They have had historic 78.39% win rate, right? Over the course of 22 months of trading results, got a 78% win rate on those trading plans, posted 4 times a week. You're also getting access to a group chat with 115 other VIP members. So you can get in there, discuss the market, share charts, anything you want. Check it out, guys. Highly recommend you do that. Get in that exclusive community there on Telegram. Let's dive into the cryptocurrency market. Right, so if you asked me a month ago how to describe this range on Bitcoin, what I would do very simply is I draw a couple of lines. I draw a line right here at 72,000. That would be the upper level of resistance. I would say these two marked deviations, and I still agree with that. And then I would draw a support line at around 61.2 thousand, which marks the highest ever monthly candle close we saw in 2021 bull market. Now, until around this point here, that made perfect sense. This was a deviation downwards to the bull market support band, so that was justified. But as soon as we saw more deviations, as soon as we saw basically the price action after the start of June start to take place, we got a very, very messy range, and it led to very confusing price action. There's a reason why everyone was confused over the last few weeks and the last month, really, including myself. It's because the whole price action, the whole range got very, very messy. What we actually did, instead of abiding by a traditional horizontal range, is we formed a new structure, right? Some of these horizontal levels still matter, but we formed basically a massive descending channel formation. So it's not perfect, but this range hasn't been perfect, right? We've seen indiscrepancies in this range time and time again, but this is probably the cleanest thing we can form right now. Let's go ahead and draw it out here. That is the descending channel formation. You can see it's relatively clean. Again, it's not perfect. There's deviations everywhere. But again, this has not been a clean range. Overall, if we're looking at this structure, if we just take away the channel for a second, what does it look like? It looks like a channel, right? Let's just keep it simple. Occam's razor. The simplest solution is probably the one that is going to be real, the one that's going to be accurate, right? So this is, in my view, a descending channel formation. And for that reason, I'm not necessarily too focused on horizontal levels at this point. Yes, they still matter, like 72K is still a major horizontal level. 61K is still a minor horizontal level, although we've seen, wicks up, down, it still is there. It still acts as a resistance level on the short term and medium term. But overall, I think it's actually the overall pattern that we need to be watching, and that is this descending channel formation. So with that said, why, is it important to bring up now? Because I brought this up before. Well, it's important now because we have obviously bounced off of the bottom of that descending channel formation. That's not the only thing we bounced off of, though. We bounced off of, look in bright green, you'll see these massive uptrending support lines, one of them stemming back from 2019 and cutting through the bull market price action in 2021. You can see very clearly acting as a very, very major support and resistance line on multiple occasions, which I'll circle here as well, here and here, and acting as support on the daily candle close. Another one stemming backwards from late last year, October, coming upwards on multiple occasions and acting as the wick close, the wick low, I should say. And so, the descending channel formation is not the only important thing. There are ascending support lines that are very important as well. But the descending channel formation offers us insights into what's just happened in the short term. What we can see is that within the descending channel formation, we have this center line, this dashed white line. And that, just like the broader channel itself, has been valid for resistance and support, particularly since around the middle of April, right? So on these occasions here, also on this support retest, resistance retest, support retest, resistance retest, support retest here, and then right as of recently, a fresh rejection, right, from the center of that channel. So that is bearish, right? Now, it's not bearish for the entire structure. The entire structure is bullish, but it's bearish for the short term. And this is why I literally came out yesterday and I posted a video, hey guys, we're at resistance, we're probably going to drop downwards. And that's exactly what we did. We were at 61.8K or 61.6K in yesterday's video. I said we're going to drop downwards. We did drop downwards. We went right downwards to 57.5K, which is exactly where I said we were going to go, to the 57.5 to 58.5 range, which was the nearest support zone. So that prediction played out well. Now we are, you know, just looking back in hindsight, well, it's pretty clear why we rejected there. First and foremost, this pattern, which is the best description of this range so far, as well as the bull market support band, reinforcing the centerline resistance, as well as the recent death cross on the 200-day and 50-day moving average, again, supporting that centerline resistance. It's formed a hurdle, right? And we need to get above that hurdle, right? Until we get above that hurdle, and most likely until we get above something like 65K or the high 64K regions, which is the top of the bull market support band, I'm not going to sit here and say I'm confident on the Bitcoin short and medium term, because I'm not. I mean, that hurdle is the confirmation point for the short and medium term. Now, for the longer term, Bitcoin actually needs to break the entire channel itself, right? And at the moment, that would be at around 69,000. And that also, coincidentally, or not so coincidentally, because the markets don't act on coincidence, they act on, you know, trends, essentially. Everything's kind of connected. That is also the 2021 all-time high region. So right now, I don't think the medium term or short term is bullish necessarily. I think we are not bearish either, because we haven't seen the breakdown on short term, medium term. We are just in a period of uncertainty here, and that is the defining, you know, the defining emotion that has defined the market for the last 2 months, essentially. Until we make a break out of this channel, there is going to be that fence sitting, that uncertainty. But I mean, it's for sure very, very clear that this is not really the time to be jumping into long positions. We are at a hurdle here. We're at a hurdle for resistance, and we need to jump that hurdle. Now, speaking of the longer term, I just said for longer term confirmation, we need to be making a move out of this wedge, this channel, sorry, that is very true. Another thing we need to be doing, there's a few things we need to be doing for the longer term, is we need to be breaking downwards from the USDT dominance chart. Now, USDT is the stable coin, and basically when the USDT dominance chart goes up, it means that stable coins are increasing in dominance in the market. So more people are holding stable coins, and obviously more people holding stable coins is a representation of more people selling assets for stable coins. Because when you sell Bitcoin, when you sell Ethereum, when you sell altcoins, what are you selling it for? You're selling it for USDT, right? So when people sell, USDT goes up. And so what you see is this chart right here being inversely correlated to the markets, right? During the 2022 bear market, when crypto was crashing downwards, this chart was rising. During the bull market we've seen so far, when crypto was pumping to the upside, this chart was going downwards. So it's inversely correlated. And what we can see is that when Bitcoin reached its all-time high in March, right, at 73,000, we reached a support zone stemming backwards from 2019, a 5-year-long support zone on this chart right here, the USDT dominance chart. So what we want to be seeing on USDT dominance is a break below both of these ascending support levels, right? Until we do that and break Bitcoin's channel to the upside, the next macro bullish move, which could potentially entail an altcoin season, has not begun. It's very simple. Now, just wrapping up the crypto side of this video, you know, if you want to look at short-term levels, you can look at this support line here in the short term in the hourly chart. If you want to take a short scenario, short position when that breaks, as well as the break of these two horizontal levels at 58.3K, you can look at that short scenario. I wouldn't personally be looking for longs here. I don't see any long structures at the moment. That could change if we jump over the hurdle, of course. As for Ethereum, Ethereum is at horizontal resistance, which it needs to break above. It's actually its range-bound support zone, flip for resistance. That's a pretty dangerous scenario. Again, confirming the fact that the market is not really looking exceptionally great at the moment. We need to be moving upwards. The total 3 is in the same position. So it's at a, you know, it's within a bullish structure, just like Bitcoin, but it's facing resistance right here from the lows it swept during March and also during April, which is when we were at the all-time high region. So again, not in the best position. We're going to head into a pretty important segment here on traditional markets. I want to show you what's going on with traditional markets. I think it's very, very, very important that you understand what's happening with traditional markets, because traditional markets have actually fed into into a lot of the uncertainty that we're seeing on crypto right now. In fact, it's probably caused it directly. So we'll look into that in a second. But before we do that, check out the Bitfinex and BingX exchanges, guys. If you want to gain access to a rewards center with over 5,500 USDT in rewards, you can check out Bitfinex, and if you want 4,000, you can check out BingX. Now, regardless of whether you win those rewards or not, what you can do and what you can get for a guarantee just by signing up is use my referral link down below, sign up, and you'll get a 15% trading fee discount for life on either of these exchanges. They're both global non-KYC, so you can sign up from anywhere in the world on both of these exchanges. They've both never been hacked before, and they're both already very low in trading fees. So take your pick, BingX or Bitfinex. My links are down below. Get those rewards and get those discounts with my links. Check it out, guys. I appreciate that. Right, let's finish off the video here and look into something that I deem to be very important. It's traditional markets, guys. Now, traditional markets kind of cause this mayhem we've seen over the last month or so. That's a very, very common known fact. Now, whether you think it was the yen carry trade, whatever you think it was traditional markets. And I personally think it was more to do with interest rates. I saw bond yields tanking. Bond yields tanked way before the last interest rates decision. The Federal Reserve decided to remain rates at a high level. They did not bring down interest rates when they probably should have. Bond yields tanked. That's the first sign that Federal Reserve should be dropping rates. They did not drop rates. And so this is why we saw the market go down, I think, because you have to understand the overarching narrative that we've seen with cryptocurrency and the bulls have been spouting is that, and rightly spouting, I've been doing it as well, I don't mean that word in a bad way, is that we're going to be seeing the Federal Reserve come in and print their way out of a recession, right? Or print their way out to avoid a recession, right? Enter quantitative easing. Now, if that was going to be the case, the Federal Reserve probably should have cut rates at the last FOMC meeting. The fact that they did not, even though bond yields were tanking, is a little bit suspect, right? And this brings the recession scenario back onto the table. So there's two scenarios here. Do we enter a recession, in which case assets get destroyed, including crypto? Or do we enter an inflationary period, in which case money is printed and money flows into assets? Those are the two scenarios on the table. Now, if you asked me 2 weeks ago, I would have said inflation for sure, and everyone would have agreed with me pretty much. And now it's kind of like, well, I don't know. We don't know because the Federal Reserve's not acting rationally. Now, what will resolve this scenario? Well, if the Federal Reserve comes out in 37 days when the next FOMC decision is here and they cut interest rates by 50 basis points, that will be an indication that they're still going down the inflationary pathway. They're still going to be printing money and hence we're still going to be seeing assets rise. But if they come out and say, no, we're only going to cut by 25 basis points, that will be a sign that they're taking a slower approach and perhaps they are forcing a recession for some reason, right? There's two scenarios here. Now, in my opinion, to me, it seems logical they go the inflationary route. To me, it seems logical they push for quantitative easing for various reasons. And I've discussed those reasons countless times. That's what I think will happen. But you know, that's also what I thought will happen last month, and I think that you know what they did with interest rates at the last meeting was a little bit confusing. I think that's probably why we've seen the market downturn so hard. It's only after FOMC that we saw the S&P 500 drop below a 10-month long support line on the RSI and on the price chart, probably due to the uncertainty that the FOMC meeting caused. So I personally hope, for the sake of assets, that we see the Federal Reserve cut rates aggressively and go into a period of quantitative easing. That's what I hope for assets. Now, for the world, I think it's a different story. But if we're talking about the Bitcoin bull market exclusively, yes, what we want to see is the Federal Reserve cutting interest rates dramatically, and we will only get that clarity when we see the meeting. So we're just going to have to be okay with uncertainty for a while here. That is annoying. I understand that. Blame, the Federal Reserve and Jerome Powell, not me. That's the simple reality. So macroeconomy is in a bit of a weird situation. We don't necessarily know what approach the Federal Reserve is trying to take. Are they trying to print, or are they trying to do a controlled demolition? We don't necessarily know at this point. I still think printing's more likely, but it's not as certain as it was a couple of weeks ago. So that's leading to a lot of the uncertainty we're seeing in crypto as well. And that's one of the reasons why I'm not just jumping fully on this bullish bandwagon yet, especially considering the charts don't even really suggest it yet. I mean, this overall structure is bullish, yes, correct, but we need to actually break it first for it to be confirmed and for us to see a breakout, right? You don't trade within a structure, you trade when the structure is broken. That's a general rule of trading there. So guys, I hope you enjoyed this video. Thank you so much for watching. Just to reiterate a couple of things, we've got a VIP group on Telegram. If you want altcoin trading signals, you can get them there. We have the exchanges, BingX and Bitunix. If you want exchanges with 15% trading fee discounts with my referral links down below, you can sign up with my links down below. Check them out. And finally, the Crypto Academy's Become a Trader 10-unit course will teach you everything you need to know about trading, guys. We've got a 10-unit course. It's on sale right now as well, so a discounted price for a limited time. If you want to learn how to trade, that's where you can do it. Very good value, very good content, 30 hours of content. We're not just showing you 3 hours of videos. No, we're doing extensive stuff here. PowerPoints, videos, charts, worksheets, everything you need. And finally, if you want to check out my philosophy channel, my podcast, you can do so. It's JS Quinn. The link will be down below. Please check that out. I've really worked hard on that. If you're interested, check it out, guys. Thank you guys for watching. Hope you enjoyed, and I'll catch you tomorrow.